Rampant dollar hits new 24-year top on the yen. Hong Kong. The greenback climbed to a 24-year excessive at the yen on Monday after Japan's ruling Conservative coalition's robust election displaying indicated no exchange to free monetary regulations, and worldwide boom fears helped the safe haven greenback extra extensively. The dollar climbed to as excessive as 137 yen and 28 sen in morning trading, its highest due to the fact that passed due 1998. It then pared the won's profits slightly and become final up 0.6% at 136.93. The dollar turned into additionally corporation on the euro, which dropped 0.38% to $1.0144, heading again in the direction of a 20-year intraday low hit Friday, leaving the greenback index up 0.4% at 107.3. The greenback is strengthening across the board. However, Dollarian is leading the circulate, said Rodrigo Cattrall, forex strategist at National Australia Bank (OTC) NABZY. He mentioned investors pass far away from riskier property were assisting the greenback standard, even as, in Japan, Sunday's election result indicating there would no change to the United States' expansionary monetary policy could weigh on the yen. The Bank of Japan's BOJ policy of keeping Japanese quotes pinned all the way down to guide the financial system, mixed with growing U.S. interest fees, has been a main factor within the Japanese foreign money's current weak spot. BOJ Governor Haruhiko Kuroda stated in advance in the day the valuable bank won't hesitate to take additional monetary easing steps as necessary. High inflation by using Japanese standards, if no longer international ones, had brought about a few public strain on policy makers to change direction. However, Cattrall mentioned this pressure have been reduced through the coalition led by means of Prime Minister Fumio Kishida's Liberal Democratic Party (LDP) growing its top residence seats in Sunday's election. The U.S. 10-year yield became closing at 3.087%, having rallied remaining weak. Growth fears away from Japan fears approximately the worldwide growth outlook, particularly as critical banks' appearance to curb runaway inflation were pushing flows to safe havens. The dollar could stay steeply priced till the risks around expanded global inflation, European energy safety and China's boom outlook were resolved, stated analysts at Barclays (Lon, BARC) in a Observe to Customers. This week's U.S. CPI will be an critical piece of the puzzle because the Fed comes to a decision between 50 basis points and 75 foundation points in advance of the July meeting. U.S. CPI data is due Wednesday and markets might probably interpret an excessive reading as a sign the U.S. Federal Reserve could need to elevate rates even greater aggressively to combat inflation. With inflation rampant across plenty of the sector, rate hikes are also expected this week from the Reserve Bank of New Zealand on Tuesday and the Bank of Canada on Thursday. NZ, INT, CA, INT, energy concerns meant the euro become struggling in opposition to greater than simply the greenback, and in early trade Monday changed into at 0.85 British pence and 139 yen, simply above final Friday's tiers when it hit its lowest because late May against both currencies. In the cutting-edge fear for the European economy, the most important single pipeline sporting Russian gas to Germany begins annual protection on Monday. Flows are expected to forestall for 10 days, but governments, markets and businesses worry the shutdown is probably extended because of war in Ukraine. The other principal monetary event this week is Chinese second quarter GDP on Friday, with traders watching for symptoms of ways tough the economy changed into hit by using COVID-19 lockdowns. Britain will publish its second quarter GDP information on Wednesday, however interest is greater focused on the ruling Conservative birthday party's desire of their subsequent leader and top minister. Sterling became down 0.38% in opposition to the stronger dollar at $1.1986 on Monday morning, having completed a risky time closing week no longer a long way from where it commenced.